Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today to take you through what the market, how the markets have been so far this week, and of course, going into the end of the week today. So again, we have had quite an eventful week with a lot of movements in the markets. We have had, of course, a lot of things. We have had a lot of bullish momentum, I would say. By far and large, a lot of bullish momentum for a number of things. Nasdaq surprised this week. Moving above 20,000. We saw Nasdaq UT 100 roll on FX Pesa. We saw it moving above 20,000 for the first time since I would say July, where we saw it crossing to as high as 20,300. However, the Nasdaq again fell yesterday after we got the U.S. Department of Justice had indicted or they sent a probe into a company which is called Supermicro Computer. So Supermicro was down about 15% yesterday, and could also be one of the reasons why we saw Nasdaq crashing a bit. Micron Technology, however, is what actually helped Nasdaq to break above 20,000. Most of you, I'm sure, wondering how was Nasdaq able to have such strong bullish momentum uh, during yesterday's London session. It was because of a microcomputer, which of course has about, I think it says 0.6% weighting on the index. And it was as a result of the news that came out for this particular company that we saw a very big move higher there for the Nasdaq. So the big moves for the Nasdaq have mostly been tech related more than any other sector, and I'm expecting Nasdaq to move higher. It is still lagging behind if you compare it with the Dow Jones. I'm expecting Nasdaq to continue pushing towards 21,000 over the next few weeks. Now, I'm looking into other things. There isn't any headline as yet regarding what has happened on the JPY pairs, but I'm sure a number of you have questions on the USD JPY and on GPP JPY. But what I can say for now is that it could be likely be due to an intervention by the Bank of Japan in the open market. Could likely be one of the reasons why we saw the currencies taking a hit. Now, I'm going into the trading for today before we just generally go through how most of the things are moving so far this week. Today we have some data coming out at 3:30 p.m., which of course is the core PCE data. This core PCE data is likely going to have an impact on the market. However, by far and large, we have seen that the general trend of PCE has been a decline since the bigger part of last year and also going into this year. We have seen that there's a steady disinflationary trend, and of course, we have also been seeing that basket of goods that are bought by the American household, the prices for those things have also been declining. So by far and large, I would say PCE is priced in, and the fact that the Federal Reserve has also acted by cutting rates, regardless of how the PCE comes, the Federal Reserve has kicked off the rate cut cycle. So nothing in today's PCE is going to deter the Fed from cutting rates. They are going to cut, they are going to cut, they are going to cut. Yeah. Going into the rest of the day, we have some Michigan data coming out from University of Michigan. These are different readings for consumer sentiment, consumer expectations, and Michigan current conditions. We're expecting, of course, that we should see higher readings there for consumer sentiment. And we could also get possibly positive readings also on the current conditions. As for inflation expectations, I think by far and large, we should possibly see decline on the 5-year inflation expectations, as well as also, of course, an increase on 5-year inflation expectations. Definitely, inflation will tick up within the next 5 years. But of course, for now, most sentiment is pushing towards seeing lower inflation. Yesterday, we got some GDP data for the US. Wasn't that really much of a stellar report? We saw the GDP coming in line with expectations. Came in at about, or the final reading actually came in, actual was 3%. Previous was 1.6%. I think this was revised because we had a previous for about 3%. So there wasn't that much of an impact there from the report. We saw a bit of selling coming in for gold, which of course, gold selling momentum that we saw yesterday was mostly because it seemed to get a bit exhausted at those record levels. So that's why we saw a little bit of selling. Uh, the speeches that we had from the Fed speakers, again, they didn't really comment on monetary and economic outlook. That was for all the speakers. I made sure to check just to be certain. There was only one speaker that made a few comments. That was the Fed Kugler. He made a few comments, but not really market moving comments, as we were expecting. Most of the comments normally come from either Powell or Bauman, but none of them said anything. So again, we didn't really get that much of a movement as we expected to get. Janet Yellen, however, came in and made a few remarks, again also reinforcing the Fed, you know what Powell mentioned in the most recent conference, that the Fed is determined to bring rates down aggressively towards possibly towards that target range of 4.75 to about maybe 5%. Yeah, how the markets reacted. Yesterday evening, we had very strong bullish momentum. The bullish momentum, though, looking at London session, I don't really seem to see a lot of bullish momentum on a lot of things. I'm seeing already pound dollar seems to have given up its ghost and starting to sell. AUD/USD is also starting to look like it may turn around. However, not it's looking relatively unchanged at the moment, just down about almost close to unchanged at 0.08%. Euro and pound are definitely down today. We are seeing USD/JPY down over 1.2%. Again, guys, if I recall when we last discussed the JPY pairs, I was very clear on them, that the JPY pairs still have bearish structures. I believe I even mentioned that the last time we met. So it doesn't come as a surprise that now we are seeing the JPY pairs turning around. But however, again, the move that we have seen has little to do with price action, but more to do with an action by the central bank itself. Something I would term as stealth intervention, where they intervene and they do not tell us they have intervened. We don't see any headline. I rushed to search to see if there was any headline, any comments by any of the MPC or the Monetary Policy Committee members from the Bank of Japan. No one has commented anything. All we are seeing is just the market selling off. So that's definitely them. It's not natural for a currency pair to collapse by 1% without something behind it. It usually has to be either economic news or it has to be a central bank action of any kind. Could be through comments. Those also still can be taken as central bank actions, comments on anything, guidance on anything, and likely that's what we have seen today morning. Looking at the US indices are looking quite choppy to the downside. We are seeing Nasdaq still looking a bit vulnerable from yesterday's super micro computer sell-off. We're also seeing that the Nikkei is down about 2.5%, and of course, this is because of that action that the central bank for Japan has done. There has been a warning that that unwinding of the carry trade might come back and haunt the markets. And I think now we are starting to see that. I would say from 5th August when we got that carry trade sell-off. I remember if you guys recall when the Nikkei collapsed about 20%. So I'll go and check it out on the charts. I think it was about did it in about 2-3 days, it was down 20%. There was that fear and dampen sentiment that perhaps maybe Bank of Japan, the, the the rate hikes which they want to begin could spell danger for the markets. After 2 weeks, 3 weeks, the markets calmed down a bit after Bank of Japan came and said that in case there's any kind of turmoil from whatever we are doing from a policy perspective, then we shall come in and calm the markets. People are like, it's okay, everything is fine, everything got back to normal. We saw the markets rallying, but there was still that warning that they might come back later and intervene. And I think now it's likely what we are seeing, the Nikkei being down about 2.6% after a stellar performance today morning definitely comes as as a surprise to most traders and of course to the markets in general. If you look at it on a 15-minute, I think we can definitely be able to see that kind of reaction there from what has happened. Uh, Everything happened at the same time. We're looking at a dip that began at about 9 a.m., intensified at about 9:30, and this is a pullback of about 2%. Very, very big pullback. Definitely tells us that something has to do with Bank of Japan. They are definitely part of this move. It's definitely them. It's definitely them. Uh, Going over to Forex, again, we are going to look more deeply on this when we cross over to the MT5, but you can, of course, see here that the yen, again, just like we had talked about, guys, this pair has been having a bearish structure for some time. Uh, ever since we topped 161, the structure changed bearish, and we've been having lower highs after lower highs after lower highs from July, by the way. So they had to be a pullback, and I believe if you see, this was when the Bank of Japan announced intervention, uh, lower level, lower level, lower level, and of course now from here, we seem to be aiming now for 140. That's why we're headed for 140. Yeah, and of course, especially for USD JPY, where we have a currency pair where the central banks are completely 100% divergent. Federal Reserve has now said they are going to cut rates. Bank of Japan has mentioned they are looking into hiking rates. That of course means that the USD JPY has to be a sell, and we should see more selling momentum there than buying momentum. Okay, I'm going to look at a few things here. We're going to first have a look at the DXY on the 4-hour time frame. This is how the DXY is faring at the moment. We are still seeing that bearish structure forming. Despite positive GDP, the net positioning for the market is that we are seeing institutions and retail positioned net short on the dollar. We have an one of the biggest events coming up for the markets is the US elections. And of course, the last time we had the US elections was during COVID. That was November 2020. We now have another election happening in September, rather in November. We're about, I would say, about how many days? About 38 days to the election. Could be maybe more, maybe about 40 days to the election. And all that is definitely not going to allow the dollar to recover. We're definitely going to see the dollar, getting weaker and weaker as we go into the rest of the months ahead. Now, maybe just for some perspective, for some of you that might want to see what happened to the dollar during the last election, you'd have to look at how the dollar performed in 2020. In 2020, we observed that the dollar actually had a bearish price action. I can just add my regression line here for you to see how we did. So, especially during this period of November to October, that is ideally when we saw the bearish momentum intensifying, and the DXY reached weaker and weaker levels. So I would say by far and large, if you're trading pairs like GBP USD, you're going to have uh, more buying than selling. But there's definitely going to be some selling, but there will definitely be more buying than selling. So this is 2024, the year of the US elections. We'll definitely have the same kind of structure forming just like we had in 2020, and we should see it weakening lower, possibly to the downside as it recovers. So a buy, a sell, a buy, a sell, but ultimately we're going to see it moving lower. Yeah, so for GBP JPY, this was the idea that we had last week. We're looking towards a sell for it. However, again, it crossed the stop loss before we could sell. But the main idea here is that we have a bearish structure for GBP JPY. And again, we'll look at this more deeply when we cross over to the MT5, where I have my intervention levels marked. But you can see the structure very clearly. Uh, Previously, we used to have interventions by the Bank of Japan. They intervened quite a lot, especially uh, sometime earlier this year. I'm just going to mark those points when you had an intervention. So that was an intervention. They intervened also there, and of course, they intervened also there. So all those were what we call stealth interventions. Stealth interventions are ideally when you have the central bank intervening. You have the central bank intervening, but not really telling you that they have intervened. So ideally, how you can tell that price action involves the intervention, or it involves the central bank, is that you'll normally find an even greater pullback than the typical pullback. We are focusing on observing the average pip movement per day for a pair like USD JPY. On average, how many pips does it move by on a typical day? One could say maybe it moves by maybe between 50 to 90 pips. Could be higher maybe than that. But we definitely have some outliers where we have days such as today where we have a movement of more than 200 pips within one particular session, like the London session. We're not looking at all sessions combined together. We're focusing on one particular session. And if you have a movement for this currency pair that is more than 200 pips, that is definitely a sign that the Bank of Japan is involved. And ideally, it means that we could see further weakness. So typically what has happened is that every single time Bank of Japan has intervened, we have typically seen a knee-jerk reaction where the market sells aggressively, recovers from that sell, and then sells again, but then it tends to recover. So now, um, fast forward to where we are right now, okay? This is what we are seeing. With a pair like GPP-JPY, this is definitely an intervention. This is a sell of about 400 pips, about maybe could be maybe about 450 pips, 400, but more than the typical pips that you get on a typical day. Okay, and this definitely means that Bank of Japan has intervened here without a doubt. And uh, again, searching online, you won't really be able to see any kind of commentary of any sort from the Bank of Japan. Again, reinforcing the sign that it's likely an intervention. And we are seeing that the yen has weakened. So uh, again, if I'm a trader and I'm ideally looking at GPP JPY with or without involving fundamentals, one thing that I'll be able to observe with this pair is that we are having what we could say a bearish structure. Uh, the central bank is undertaking what we call a change of policy for them to have more rate hikes that could possibly strengthen their domestic currency, which in this case is the Japanese yen. So if you see how the yen has been moving for a pair like GPP JPY, we've been having it recovering from swing lows, okay? Recovering from those swing lows, selling back, and then of course recovering. So typically, ideally for me, my outlook on GPP JPY has been looking towards a sell on it. However, really wasn't certain when exactly that sale will happen, but now it has happened, and I think if I'm changing it to a line chart, this ideally would be uh, the swing high for this cycle. Okay, so this was the first swing low. So I have something maybe like this. Okay. Mm, yeah, so something like this is now what you can expect. So I can just maybe move this a bit lower. So if I'm adding my Elliott wave, ideally would be looking for something like this. So this is how far down you can expect the GPP-JPY to move. Seeing that now they have intervened here, it's likely that we could get an even weaker move for it much lower. So if you move towards something like USD-JPY, again, fast forward back to August, rather, if we rewind back August, if you guys recall the time when the markets collapsed, that was when the Bank of Japan had indicated that they were going to, they were going to start. They actually fasted by hiking. This particular meeting, they hiked the rates. It was a rate hike of about 15 basis points. They hiked from about no, I think it was a rate hike of about 25 basis points. They hiked by 0.25%. The immediate reaction from the market was we saw it crashing. Um, when they announced that they were going to start hiking rates for the first time in over 20 years, that is when the yen began this downtrend. So a uh, recovery from here was when the Bank of Japan deputy governor mentioned that they are ready to intervene, rather not intervene, they are ready to come and put to an end any market turmoil as a result of their policy actions. And it's at this point where most of the risk assets recovered. But then you can see this recovery was short-lived. We saw the market selling again. And ideally, first discussing with clients, my outlook for the USD JPY has been a bearish outlook. Now the swing low is definitely in from here. We should possibly see it now retracing back down here. Yeah, and just like I mentioned earlier, guys, I mentioned earlier that the two central banks have very divergent policies where one is hiking, the other is cutting. In this case, we are meaning Federal Reserve, which is for the US, is cutting, and the central bank of Japan is hiking, the BOJ. So, which means then ultimately USD JPY will definitely move lower in this case. Yeah, so that's what really we have. Of course, today this has definitely got traders off guard, and now we need to be a bit wary about how we can manage. But take note that if you're selling, you're definitely on the right side of the trade, and uh, you definitely see perhaps more movements favoring you. So let's cross over to the MT5. Uh, let's cross over to the MT5 so that we can see what's happening over there. So I just want to talk about the Chinese index, the China F50. So the China F50 has been one of the uh, you know one of the most interesting uh, assets. For most of you that maybe do not know, you can actually trade the Chinese index on FX Spacer. Some of you are not aware about this. You can actually trade it. So the China A50 has what I would call a falling wedge. A falling wedge is a trading pattern that is a reversal pattern where the market moves from a downtrend market to switch to an uptrend market. And we usually look to buy whenever it is switching. So some of the things we have gotten, or some of the commentary I've gotten from China, especially this year, especially this week rather, is that they are going to perform what they call stimulus, and they're also going to provide income to low income groups. Okay, stimulus. They're going to provide stimulus to low income groups, and they are doing this to sort of like cause they want the market to. They're going to do cash handouts. If I'm to just make it put it in simple terms. So ideally, these cash handouts are ideally seen as I would say positive if you're trading the Chinese F50, because we will definitely see a more sustained move to the upside for it. So you can actually trade it. Now, the last time we got something like this happening was during COVID. If you guys recall, the Federal Reserve was providing cash handouts to its citizens. I think it had two cash handouts. The first one was in I think August. The other one was around November. So what we are seeing with that is that we are likely to see. Let me just get my screen shared. Okay, okay, it's going to be shared now. Yeah, so you can just check this out. It's one of the reasons why we saw the China F50 rallying, especially last week, and also one of the reasons why we also saw the Nasdaq rallying and the other indices generally, plus also gold. The rally was because of this. Yeah. And the People's Republic Bank of China is also joining many other central banks to come and pump money into their economies, which could also spell further upside for a lot of things like gold, especially gold, and also other things like the indices. Most of those rallied this week because of these headlines. So this is the China F50. It's available on FX Pesa, and you guys can trade it. You can look for it so that you can get some trading opportunities there. So let's look at other things. We are going to move over to Bitcoin first. So Bitcoin seems to be on a steady move back to the upside. However, most people are waiting for it to reach 70,000. So now we are waiting to see whether Bitcoin can actually reach and break 70,000 and actually stay above 70,000, because there's one thing for it to move there and then also fail to break there. So Dow Jones also looking quite choppy. We talked about a steady move to the upside when we last met on Wednesday, and I believe this is still happening. We're still seeing a Dow Jones moving higher, and I suspect we could see it keep moving higher and higher as we go towards the elections. We should see the Dow Jones reaching as high as 45,000 and even higher. So ideally, how you should be trading a Dow Jones here is you should be waiting for the liquidity grabs for you to look for buy points, and then you jump in and you buy. Nasdaq, we discussed this. We discussed buys for the Nasdaq. I indicated to you the last time we met that Nasdaq was going to break 20,000. Nasdaq definitely broke 20,000 and is on now on a steady sustained move to the up to further upside. So I think we should see the Nasdaq reaching as high as 20,400 and even higher as we continue to move ahead. Gold, uh, I adjusted my Fibonacci retracements on gold today morning, where we are now seeing, just a moment for it to share. Okay, so I had adjusted my Fibonacci retracements there on gold, and I indicated that what I'm expecting now is that we should see gold staying within this range here. I don't see gold moving to 2,700 today. We're either going to stay in a choppy move within this area here, or we are going to sell from there. So that's what I'm expecting for gold for now. We should see either a range within this zone, or we see it selling. Now, if you look at the moving averages for gold, especially from around 13th of December, we saw that after gold broke this level of structure, sorry, my screen has frozen. My screen has frozen. I don't know what's happening. Okay, so let me just proceed because I think I'm seeing my cursor is moving, but the chart is not moving. Anyway, so just like I was saying, ever since gold broke this level of supply around here, we saw, first of all, a very strong imbalance point there. Gold broke above very strongly, and then we saw it rallying. Now, ever since it started rallying, we have also seen that the distance between the 50 and the 200-day moving average have grown further apart, indicating that there is still very, very strong upside momentum possible for gold. However, one might argue that gold's upside has been extremely extended. It has to reach a point where it's going to pull back. However, what has kept this trend uh, like what has kept this trend healthy is that every after a push higher, gold has been selling a bit, pushing higher, selling a bit, pushing higher. Now, already the pullback that we expected from gold from this level has already happened. That's why you can see yesterday gold did not sell even more, because it was able to reach uh, it reached 2,650. Then after it recovered from there, bought back again, and now it is selling a bit. So at the moment, I would say gold might range, but we could get maybe one more test of 2680, and then we sell from there. So um sorry, I think my MT5 is frozen. I'm unable to actually change the chart. So let me just try and restart it again. Okay, so the MT5 is back up. Let me just share my screen. Okay, so we can continue. We are going to move to GBP/USD. So GBP/USD currently has double tops, very, very clear. It can't get any clearer than this for us to see what's happening with GBP/USD. We have very nice double tops there. I've actually put some two arrows there for you guys to be able to see clearly what is happening on this pair. So now that the double tops have in, we should see uh, more pronounced downside there for GBP/USD. So I'm expecting us to pull back to the nearest demand zone, which is somewhere around there. That is over the course of today. So we should see some selling momentum that could take us back to that level of demand. And then once we breach this level of demand, we are now going to get into the 38.2% fib retracement zone, which is somewhere around there. I'm expecting that this pullback could uh, it won't happen swiftly. It may take a bit of time, but this is where we are headed on GBP/USD, back to that zone, and then we could possibly get a bit of bullish momentum from the zone briefly before we continue selling to the next zone, which is there. Now, crossing over to Euro USD. Euro USD, we had spoken about the likelihood that it could break structure here to buy, but we got a grab on liquidity. And soon after we got a grab on liquidity, we saw GBP/USD selling. However, for GBP/USD, despite this, it's still showing signs that it could move higher, even when its counterpart GBP/USD is selling. This is because I'm also looking at the distance between the two moving averages. They're looking quite bullish at the moment. And what this could mean is that we could likely see Euro USD moving higher towards that zone, even as GBP/USD is selling. Crossing over to USD/CHF. USD/CHF is still mostly choppy. We haven't gotten that much of a sustained move in one direction for it. Yesterday, the Swiss National Bank, I think you are with Rufus yesterday, and I'm sure he took you through the Swiss National Bank rate decision. But the Swiss National Bank cut interest rates by 25 basis points from about 1.25% to about 1%. And what that did to USDCHF was you saw initial sell, then it recovered and bought, and now we are seeing it selling. So I think for now, if I'm swing trading USDCHF, I'm looking for a sell, and I'm expecting it to weaken further to the downside, possibly towards this level here. Now, also on a 4-hour time frame, ever since we got a death cross on this pair, which was on in July, ever since we got the death cross, we have never seen a recovery for USDCHF. So it's still very vulnerable, and we could see further weakness from here to lower levels, especially going into the elections. Nvidia, also very good stock for you to hold. Uh, Currently, I'm expecting Nvidia to continue in this rising channel that it's in. Uh, for those of you that are still not aware, you can actually trade stocks on FX Spacer's platform. You do not need a lot of capital to trade. I would recommend maybe a minimum of even $100 for you to get started with these stocks, and you can buy them. So Nvidia, I'm expecting us to break higher to 128, possibly to 140 over the next few weeks, and you should see how that can possibly be an opportunity that you want to take on. Okay, question time, guys. If you have any questions, be happy to handle them. So, Boaz Chemweno, you're saying Shigeru Ishiba wins Japan's ruling party leadership election to become nation's next prime minister. Okay, so let's check out that news and see what it means for the markets. So let's check here and see. This is Shigeru Shiba, Prime Minister, Japan. Okay, so former defense minister Ishiba becomes Japan's next prime minister. So it's saying here Japan's ruling party on Friday picked former defense minister Shigeru Ishiba as leader, setting him up to become prime minister next week. The party leadership win is a ticket, is a top job because the Liberal Democratic Party's ruling coalition currently controls the parliament. Considered a defense policy expert, Ishiba has proposed a Asian version of the NATO military. Uh, Okay, so could be maybe this could likely be the reason why we saw the yen pairs dropping. Uh, but also, I wouldn't say for certain that this is the reason why the yen pairs dropped. It could be likely. I still insist the sell-off that we had has a lot to do with the central bank and their actions. Yeah, but to an extent, definitely, um, uh, you know, such news sometimes also has an impact. Yeah, but I would limit the impact more to any actions by the Bank of Japan. Okay, next question. Next question. Yeah, so the reason for the JPY drop, I think we already discussed that extensively. Gold and WTI. What's moving the markets? Yeah, so for gold, I think Apple, I might want to refer you to the market snapshot that I did on Wednesday. Uh, you just check it out. I think I discussed gold extensively on that snapshot. Some of the things, the highlights I talked about in that snapshot were the central bank purchases, the Basel III requirements for central banks, requiring that they can hold gold as a reserve. I also talked about the rate cuts and the chances that there are going to be more rate cuts. So you can just check that out. You can also check out what I spoke, what the same snapshot also. I covered commodities like oil, and I also talked about how the tensions in the Middle East could be one of the key catalysts for price action for oil, plus also uh, oil also being a demand commodity. Typically, during times of weakened inflation, we tend to see a lower oil price. So that could also be in play. So you need to check that out and see. Yeah. Okay, hi Norbert. Is the CRT overhyped or is a good strategy? Humphrey, what is the CRT? Can you? Did you mean COT? I've not heard of CRT before. Most likely you meant COT. So COT is commitment of traders. Commitment of traders reports are reports that are released by the Chicago Board of Options and Options Exchange. And of course, we normally get these reports every week. This report details net speculative long and short positions for institutions and commercial and non-commercial, and it also allows us to be able to gauge what their positions are, and it also tells us or shows us which side of the market is the market is the price action more skewed to, whether it's more skewed to a buy or more skewed to a sell. So it's a good, I wouldn't call it a strategy per se. Most strategies that you need to use for trading have to be mostly technical strategies. uh, uh, News and all of that is mostly, I would say, um, uh, market moving only for a limited period of time, but by far and large the market needs technicals by far and large. Yeah. Mm. Next question. Yeah, morning, Patrick. Patrick, you're saying that surprise strength, but the JPY came as a result of the elections in Japan. Shigeru Ishiba won the LDP ticket and is poised to be the next PM. He advocates for rate hikes to curb inflation. Yeah. All right. Awesome. Okay, so I think that's it, guys. Where's gold headed to? Yeah, so for that, I think I've already spoken about that. Not to repeat myself, Joseph. For gold, I said we are in a range at the moment. It seems to have reached its peak for its swing, which is around 2680 zone. So we should see some pullback from that level to the downside. But by far and large, gold is still skewed to buy more. So just take note, if you're selling, don't sell aggressively because the market is only favoring buyers other than sellers. Right. So that's it from me, guys. I wish you guys all a happy trading day today and an awesome weekend.